this.
Okay, let's analyze gold for this week and what is going to be our expectation for the week or for the new week coming. So, like the difference between who is that?
Asha uthole job eka 11:42 seba owner's responsibility.
So the difference between gold and other pairs, other currency pairs, mostly GPB pairs, when it comes to Bastra concepts, is that gold hardly creates fantastic five on the higher time frame. So it is on the lower time frame, smaller time frame like M15, M30, M5, and even M1 that gold mostly produce fantastic five. So as someone who like to do top-down analysis, you know, if I'm doing, I can do top-down analysis on other GPB pairs, other currency pairs, applying fantastic five from the higher time frame, even down to the lower time frame for me to take my setup. But sometime in gold, it hardly, you cannot find a setup on a higher time frame like daily, like weekly, even monthly, because gold is always at a high momentum, especially for the past and throughout this month. Gold has been, when we go to the higher time frame, let's look at the weekly time frame. You see that gold has been moving impulsively. Let's go to the monthly time frame. You see, gold has been, so when gold is in a higher momentum, it hardly creates a setup. So in this wise, with this experience, I now introduce zone of sensitivity. So with the application of zone of sensitivity, so I slightly trade gold differently from other pairs. I treated gold differently from other pairs with zone of sensitivity and other patterns that gold always create in form of in place of fantastic five. There are patterns that gold creates as well. So when it comes to gold, I treat gold differently from other pairs. Other pairs 100% Bastra concept. When it comes to gold, I apply other different things for me to know where to take a trade. So using zone of sensitivity in this analysis, we're already in 1 month, monthly time frame. So in a monthly time frame, we have our lower monthly zone, we have the middle zone, and we have the upper zone of sensitivity. So this zone of sensitivity actually guide us and help us to know the direction of the market. And also, we use this zone of sensitivity to predict where market can possibly retrace or reject from. So for the past for the past 3 months, gold has been tanking up. Gold has been moving impulsively bullish. So I don't know, maybe because of Israel war, gold has been moving, and we have been expecting gold to drop for a very long time now, but it has not happened. So, but let's see what we are seeing here. Let's use what gold has presented, the data gold has provided on the chart for us to build a case and then know when we should be looking for our trade. So ever since gold entered into the upper zone on the monthly time frame, last month when gold entered into the upper zone, there was a serious rejection. This is the rejection. When gold touched the monthly zone of sensitivity, upper zone of sensitivity, here, gold rejected. Look at this rejection. And the monthly candle closed as a hammer, right? Is that a hammer? Is it a shooting star? Yeah. So this is the rejection. The market got here rejected. So we're expecting that gold is going to drop. But this new month, gold was moving bullish until when gold get to this point here, that same level, upper zone of sensitivity on monthly, the market reject back down as well. Look at the rejection, you know. So what does that tell you? It tells you that there is a selling pressure here from the monthly upper zone of sensitivity, and we may likely to be pushing back down bearish. But let's go to with this sense, or with this analysis from the monthly time frame, let's go to the weekly time frame and see. Remember, when we said that monthly is going to be dropping, we are not going to start seeing signs from the monthly. We go to the lower time frame, either weekly or daily, for us to see what one of the signs that we are going to see is that the Dow theory is going to be breached on the lower time frame, like daily or weekly. That is when we know that, okay, it's like we are definitely gold is going to start retracing from the monthly time frame. You know, a monthly retracement is going to be like massive opportunity for us to sell in a lower time frame. So let's get to the weekly. So when also get to the weekly time frame, I introduced, I think 2 months ago, I introduced the neckline break entry strategy, which I taught you. I even dropped some of the video on the Telegram channel about the M and the W patterns and the variations of these M's and W, right? We have the normal W and the normal M. We have the truncated and we have the extended. So when you look at this gold on the weekly time frame, you see gold got to the monthly upper zone of sensitivity and it dropped. And then gold went back this month again, got to the up that same upper zone, is trying to form what is forming what we call the M pattern. And this M pattern is like, this is extended, or the, yeah, like this one, this is the extended. You know, extended M happened because of liquidity. They will push the second leg to clear out liquidity somewhere here. So we are seeing the M patterns here. Instead of like in other pairs, we will see a blind spot or we'll see a Quasimodo, but gold is giving us a different stuff here. So that is why, in my experience, I've been able to, you know, diversify how to trade gold. If you want to trade gold, specifically on Bastra concept, there are some weeks that you will not even see a trade to take, but things are happening. The market is giving opportunities that you don't know. Maybe because you are waiting to see normal fantasy 5. And that is why we introduce, or I introduced this entering techniques for us to be dynamic. The market is dynamic. The market can give you anything, right? The market can decide to give you whatever it wants. So if you are dynamic with the market, whatever the market throw at you, you'll be able to understand the language, and then you follow along with the market, right? So we are seeing extended M here on this weekly time frame. And this last week closed with a bearish engulfing. This is the second leg coming from the upper monthly zone of sensitivity. I mean, the first leg reject, and then push again, form the second leg, extended, because this leg, I think they push it up somewhere here to clear liquidity, liquidity from the first leg, right? And then after clearing liquidity, gold drop, and this weekly candle closed as a bearish engulfing. What does that tell us? It tells us that sellers are coming into the market. We are seeing a sign of rejection from the monthly time frame, and in the weekly time frame, we are seeing extended M, and the last week candle closed as a bearish engulfing, right? From the weekly aspect of things, if we want to trade the M and the W on the M15 time frame, so we use the neckline, whether it is extended, whether it is truncated. Once market break this neckline like this, then we are going to buy, right? But on the weekly time frame, the only time we are going to be sure of a serious downtrend from the weekly, when market close below this neckline. That is when we know that, okay, we'll be dropping massively from the weekly time frame. So let's go to the daily time frame and see what is happening on the daily time frame. Okay, guys. Okay, so this is the daily time frame, right? So this is the daily time frame, and look at the daily time frame. In fact, we are like through our last week, goal was in fact goals. I think I caught over 500 pips only on Monday. Goal was dropping, but I think on Tuesday started like consolidation, kind of consolidation. Tuesday same. Then from Wednesday, Thursday, goal dropped massively to Friday. So we are going to be looking for what? We are going to become sellers because we have a rejection coming from the monthly time frame. There is a rejection from the weekly time frame. Also, there is a rejection, right? So now we are going to be looking for opportunity for us to sell, right? And this is when we want to see any fantastic five or the neckline break, because we use neckline break on gold. I use this entry on gold only. So, but the neckline break is used from M15, M5 when I understand the trend of the market from the higher time frame. Like I keep saying to you guys, don't be this person that you go and be looking for fantastic five in the lower time frame. I tried that when I started Bastra concepts. I've been trading this concept. I have a lot of, in fact, I've even refined it. Some of the things that they didn't taught me, I've been able to learn from the market. So whenever I'm telling you, I'm speaking from experience. I'm not speaking from a YouTube video you watch, or they posted Nora, my mentor video on YouTube that you watch, because most of people that watch those videos still not profitable, still losing, because experience matter. So I can even give you more of her video. I can even post most of her video, and people will still not be able to make money, because Forex is not 1 + 1 = 2. It's all about practical and also with experience. So my trading journal have taught me a lot ever since when I started trading Bastra concept. I don't care about higher time frames. So I'll just be going to M15, M30 highest, M5 looking for fantasy 5. Oh, this is SNIC, this I will enter. Sometime I win, sometime I fail. So there was a particular month that all my trade was negative. So I became so pained. So I started asking, why is this setup not working? Why is this setup not working? So I started paying attention to higher time frame, and higher time frame is Q, right? Higher time frame is Q. So let's go to the H4 time frame, because we said we want to be looking for what? Selling opportunity. From this daily time frame, my analysis was this guy is coming here. Maybe the market is coming to retest this area so that we can buy. So I was looking for buy, so that I was even selling on Monday for me to take profit somewhere here. So after the market get to this point, I'm going to be looking for buying opportunity. But when the market there was not even sign of buying. The market keep dropping. So on the H4 time frame, we can find what we call one of our reversal setup, which is what? Quasimodo reversal. So this is a potential Quasimodo reversal. Why is this Quasimodo reversal happening? Because on monthly time frame, we saw the rejection. The last month candle got to the upper zone of sensitivity, rejected back, right? There was a selling pressure. Then this month got to that same level and it's rejecting. So on the H4 time frame and on the weekly time frame, we have the M pattern. M pattern also means reversal, right? And then on the H4 time frame, we are seeing a Quasimodo reversal. Everything is aligning that we should be looking for what? We should be looking for selling opportunity. And also, if you look at market structure wise, you see that this market was making higher. This is a low, this is a high, higher low, higher high, higher low, higher high, higher low, higher high. And you guys should always remember the Dow theory. which states that the market will continue to move in this specific direction until the preceding structure breaks, which means until the previous higher low or higher lower low is being breached. I mean, the previous higher low or lower high is being taken out by price, right? So in this wise, from this point, when market was moving in an uptrend, you see the market has been respecting the higher low while breaking the higher high. Not until the Dow theory was disrespected. Look at this last higher low was breached, and also this one also breached. So in this wise, we are having what we call a Quasimodo reversal, right? When you also look at this one, we have the first shoulder here. We also have another shoulder here, right? So which one are we going to choose? I dropped a video last year, Quasimodo QM mastery. QM mastery, because sometimes price do this a lot. You may mark your QM here at this point here. You mark your QM here, and then you will be waiting for price to come and react. You'll be waiting for price to come and react. And then you see that price will get to somewhere here and started dropping. Why? You say, oh, price did not get to my the left shoulder. That is because you don't have mastery when it comes to Quasimodo reversal. You only watch Quasimodo on YouTube, and you know, of course, you know the criteria of a Quasimodo reversal, right? But most time you just mark your Quasimodo, and then you realize that market failed to get to that point, not knowing that market respect the current price. The current price means the current shoulder, right? This is what happened. We have something like this. And then the Dow theory was breached. So we mark here as our left shoulder, right? And then the market could not come to this point. The market went further to break this low here. This one becomes the current shoulder. So if we mark here and if we don't know, for instance, now, we'll be waiting for price to come all the way to this point here. It's too far. Price is going to react from this shoulder. That is why you see sometimes price will come close to this one. Meanwhile, it's respecting this current one, and then the price will start dropping down. So that's why you also need to take note of how Quasimodo reversal works, right? So for us, we are going to use this current shoulder. But if the market gets to this point and fail to give us entry signal, then we'll be expecting market to get to this point here. Then we sell. But this is my marking, and this is my analysis on gold. We are using this one. This one here. This week, I think on Friday, we attempt to buy gold as well. But the market could not go as expected. Just little profit. Market started coming down. We have to close the trade. So now we have a Quasimodo here to sell gold. And you know, when it comes to Forex trading, discipline and patience is what is going to pay your bill, right? So you have to wait patiently for only experienced people will say, okay, I'm going to buy. But maybe you press a buy order here because we can see a high selling pressure into the market, right? So we can say, okay, let's buy, and the market will just move a little and start dropping down. So in a selling market, anything can happen. That is why you want to wait patiently for price to come to a high selling pressure area so that you can take your sell without fear or favor. Even if you lose, you know that, okay, it is a wise lose, right? Because most time, our criteria will be met, everything will be met, and we'll still lose the trade. And which is why losing is inevitable in trading. We cannot avoid losses, right? But we can manage our loss and increase our win. So we are going to wait for price to come back to this point. Then we have entry our entering signals on the lower time frame. It could be fantastic 5, it could be the neckline break, anyone. Then we are going to get in, take our profit here. Also, you may not really take your profit at the lower high. You can measure on a lower time frame when you find an entry signal, maybe M15. You can measure your risk to reward and say, okay, I'm going to only measure my risk to reward from 4, 1:4, and maybe 1:4 is going to be here, not even here. So the moment you reach $100, you know that you are coming out with $400, or you reach $50, you know you are coming out with ×4. The moment market gets to that point, you are out of the market. You are done. So you just want to measure your risks. You have your own risk appetite. Some people will say, okay, I'm going to hold up to this point. So when you measure your risk to reward to this point, it can give you 7%. The moment market gets to this point, you are out. Even if the market keep tanking down, that is none of your business, right? Because sometimes you say, okay, this market is going to drop, let me hold. And you see that you have made a lot of profit and the market is going back up again. Like what happened on Monday, my initial target, market come there, I think 5%. I was targeting 7% thereabout. So market come so close to my TP, but the market start giving me rejection. I know that, okay, 5% is enough. I have to close that trade. And then the market reject back almost to my entry. You see, if I say, okay, I must hit 7%, you know, you will see yourself from making a lot of profit back to zero. And you know how it can destroy your psychology, right? So now, before we go ahead to take this trade, when market make mistakes, our prayer is when gold make mistakes to come here, we are going to be looking for selling opportunity without fear or favor. But let's go to the higher time frame to look for confirmation of this Quasimodo, right? So like if you find a setup on H4 time frame, this is H4, our confirmation time frame is going to be daily and weekly, right? So if we find a setup on M15 time frame, our confirmation time frame is going to be M30 H1. So in this wise, we have a setup, a potential Quasimodo reversal on the H4 time frame. So our confirmation is going to be daily or weekly time frame. So let's check out our confirmation. So this is the daily. Daily here, we have a double Marabozo here. So, but let's go to the weekly time frame. From the weekly, we can see that we have a bearish engulfing as confirmation. So look at it. So our confirmation is bearish engulfing from the weekly time frame. So what are we are going to be expecting to happen this week is that gold is going to retrace, going to wait for a retracement, and then we look for buying opportunity. So when market retraces to this point, we sell. Our long-term target is going to be here at this point, at this daily zone of sensitivity. Also, this daily zone of sensitivity align with the weekly zone. So when the market break it, and then we are going to be looking for more selling opportunity. We know that is when we'll know that gold is going to be tanking down throughout, in fact, even throughout next month. But we are day traders, so we are only focusing on what is going to happen next week so that we'll be able to take opportunity on gold, right? So we are going to become the selling neighborhood coming. Market is opening tomorrow, right? So this is my analysis and this is my bias on gold USD. So if you guys have any question, you can ask me before we can go to other pairs, right?